We are ready. We're gonna kick some ass and get some Bitcoin in this live show. Everybody be ready to make this shit happen. All right. So I almost had to cancel again. I lost complete internet to my house this time, and I thought I was gonna have to do this from a laptop at my YMCA, but then the service company was able to get to my house a lot more quickly than I anticipated, so I was only there for 15 minutes and I came right back home. So, had a power outage on Tuesday, then an internet, literally service provider outage on Thursday, but they fixed it fast. I was actually really surprised and impressed. So here we are. Bitcoin's getting ready to get kind of interesting here. I don't even know how to phrase this. I think no matter what bias you have and no matter what direction you are trading, you need to do so with heightened caution that that direction you're trading will not get much continuation. And I want to show you why in this in this stream here. I'm going to try to keep my eye on the clock and not talk about Bitcoin for more than 20 minutes. I'm going to try real hard to do that. And then anybody jumping on here who might be new, you can ask questions about altcoins. I'll get to them after Bitcoin, Ethereum, XRP. That'll take the first 35 minutes. But I typically only have time to answer questions from folks who have an emblem. It's like a circle with a star in it. Who ask questions. Those are my YouTube tier members. And they ask enough questions where it takes up all my time. So if I skip your question, I'm doing it for a reason, but I'm not doing it in a rude fashion. It's because people are part of paid for community on YouTube to have that as one of their perks. So, and if you wanted to check that out, it's I don't know if it's on the, I don't know if the join button is on the live stream, but on any of my videos, you can just, right beside the subscribe button is a join button. You can click it and explanation video will pop up. So right now, and so let's start diving into Bitcoin here. So this week's going to be interesting. This week and next week are going to have the potential. Let me think about this. Yeah. Bitcoin price this whole week and next week has the potential to be a fake out within a fake out, look like it turns bearish when in fact that bearishness going all the way down to 19.5 or 19.6 is actually a perfectly bullish daily pullback. But I have a pop quiz for you. So I'm going to show you all the reasons why. Even though that'd be a massive pullback, and you would assume that this would break down, but I have a pop quiz. I think that even down to 19.6 roughly down here, which is the top of the also the top of the triangle that Bitcoin just broke out of, plus this horizontal I have here. I think this is a healthy pullback on the daily, and the pop quiz is this. Under the parameters, it doesn't all happen on Friday. And my pop quiz is why? So for example, if Bitcoin pulls back here and hits this on Saturday or Sunday, or even Monday, why would that still be considered a healthy daily pullback structurally? Regardless of closures, just a level on the daily chart. But if it happens tomorrow, I wouldn't be bullish anymore. Even if it bounced from here, I would be on lower high watch. And so I will answer that question by the end of the video. And the answer will include information that you might strongly consider within your own TA when you're trying to get a feel for where price is going. So stay tuned. I'll probably cover that at the end of this Bitcoin segment of this live stream. So let's dive in and get some Bitcoin. So let's take a look at what Bitcoin is doing from a macro perspective. I'm on the micro chart. I'm going to take it off, put on a macro channel. Actually, I'll keep on that the 10 EMA. I'll go to the 4-hour chart, zoom out to the 69K top, which you will see on the left-hand side of the screen, and I'll point at it real fast. Right here, 69K top. Bitcoin right now, you can see here the highest it got in a bull trap, the very aggressive one in April, it did get above this purple line. And right now, Bitcoin is flirting with it. So from a macro perspective, this is what we have going on. And the big question in everybody's mind is, at least reasonable people. Reasonable people aren't thinking the bottom's in like and celebrating with rejoice after this. I don't know why anybody would do that. But reasonable people, the big question on their mind is, hey, I assume the macro trend will be down still. But my big question is, how high will this rally go before then turning back down? And we have my favorite option for that, where I'll start this video, is for Bitcoin, it's right at 22K. And for Ethereum, it is 1720. Unless that pullback area is hit, 19.6-ish on Bitcoin, specifically on Friday. But the timing wise, I'll cover at the end. So let me go show you why. First, I think 22K on Bitcoin. All right. And then I'll show you, if it pulls back, why that target, even though it's deep, it could still blast off to that exact point. And then I'll let you know when I think the rally would be over and under how price would move, where I would start becoming bearish again. Let's get it. I'm going to go to the daily chart. And this is the macro channel. I think I can take this bad boy off. We already know it's at the top and it's flirting around, which adds to the idea this could be a fake out. And it could come crashing right back down. All right. So, in general terms, this shape right here, this is 150 days of price, roughly. This shape within it is extremely bullish. And the daily RSI is looking nice too, bouncing on top of its EMA, exiting the bearish control zone. I mean, this is pretty serious stuff. It's honestly set up where it does have the structure. It has the structure to go up to 25K. I don't think that's my favorite spot. I will stop being midterm and micro bearish, or midterm and short-term I will stop being midterm and short-term bullish at 22K for the following reason. If somebody asked me to look at their altcoin on whatever time frame and the chart just happened to look like this, even with the big drop down, doesn't matter, right? Maybe I'm on the 5-minute chart, like the candles all look the same, right? Once you're zoomed in. But regardless of the time frame, if I ever were to see this shape, like, hey, Tim, go look at MTRG or some altcoin, I don't really know what it is. From before this breakout, I gave my community update on Sunday, like 4 of them, alerting them, I think this is going to go up past 21K. All right. And here is why. So if you look at it, you have a big triangle. And if it breaks out of that, it's easily going to take out the first local high. Simple. It's going to go past it, period. Doesn't matter if it's Bitcoin, the price of oil, whatever. If you have a nice shape that you get a breakout and it does get any form of continuation or it just breaks out, it's going over the first local high on whatever time frame it is. But because this one was so high, I needed to look left and identify where's the next fairly recent local high, and that's here. So typically when this happens, there's a lot of liquidity over local highs in forms of, stops and liquidation points of people trying to short into a rally. And that is going to happen just over this point right here. That's where the rally is extremely likely to go, period. It doesn't matter. It's very, very likely to happen without, economic circumstances to kind of break that down, which could happen. It easily could happen. All right. But it hasn't happened right now. So that's 22K. That's how I got to it. My VIPs it might have been VIP call, but on Discord call, we found a way that there's a lot of there is a lot of confluence with that in terms of using fib. Even though I'm not a fib guy, I kind of make fun of people, who overuse them and use them in hindsight. Like, oh, look, it hit the 618. Well, you didn't forecast that. It doesn't, who cares if you're going back in time and drawing lines? So I'm going to do this in the future, something I don't see done very often. And even though I'm not really a fib guy, but I'm going to go just a simple bullish retracement from wick high down to roughly its breakout point. And you got a lot of areas of interest up here as well where this rally could go. So the 414 is right. I mean, the 414 and the 1618 hug the horizontal I already have here. And so at the 618, just above 20, so that's 22,150. It's just above here. A lot of confluence where, even Fibonacci traders will be looking at that from a retracement standpoint. And in order to know about probabilities and try to, make a good guess on how price will react at an area, is I always go back to the basis: are multiple groups of different people seeing something at the same place, but for different reasons? And there's a lot of things to that effect stacking up. All right, because it is really just daily structure plus Fibonacci's, and there are going to be a lot of people taking a look at that. All right, so that is my area for Bitcoin. But before that happens, there could be what would be apparently or perceivably a higher low that's so aggressively bearish looking that it's going to convince people that this was a fake out and it's done. But I think that it could screw up a ton of people, and here's why. I think this could redraw big and still hit 22K easily. So if you do the, where is it? This chart, yes. So I'm on the daily chart once again, and this black triangle has been my target since last week. But just trying to anticipate how high will this go if it breaks out. Okay, and the highest I think this rally could go is somewhere closer to 23.5 at the origin line here. I don't think it'll go above there. Anyway, but my better bet is around here. Failure pattern above the candle highs, which is right at 22, and with a bullish fib retracement. But a pullback down here over the weekend, or even structurally, even Friday, but just if you can get like 2 or 3 red candles in a row, right? Just bearish days, come all the way down here to 19.6. What is that? That's just a retest of the top of the triangle. And looking at the daily structure from this point to this point, let me zoom in. What would this right here be if price went all the way down here to like 19.6, using the top of the triangle as support? What else would that be without this line here? Just looking at the daily structure. Low, higher high, higher than that one, right? So low, lower high, lower low, higher high, which means at this point, Bitcoin was in a no trend on the daily. Higher low, which was confirmed probably here. So at this candle, Bitcoin was in an uptrend. Okay, maintained the higher low structure. Okay, all good. So this was not confirmed as a lower high. And then you got another higher high. So if you pull down to here, what is that? It just maintains the trend, a higher low after multiple higher highs. So don't get too bearish. And so now I'm going to zoom in on the micro time frame to show you what that looks like. And then I will wrap up Bitcoin with the timing. Why Friday? Why Friday? It's really key. I'm telling you. I'm trying to be as helpful as possible. So go to the micro time frame, throw on my micro lines again. So this is actually, I wish I could take all this off, but this is Sunday. I don't want to do it like that. So over the next 3 days, we could have 3 or 4 red daily candles in a row. And I'm going to go to the 30-minute chart. And Monday is here. So all of this time, Bitcoin can just chop around, lower high, lower low, boom, 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 hit this line, 19.5 and change, 19.6, way over here. And that's what it would look like zoomed in. The same daily, obviously bullish thing, right? And it could go down for days. And if it bounced there, it would actually allow Bitcoin to go up longer because it pulled back. Making sense? And that would also mean, Bitcoin, a lot of people might start getting bearish because it goes back below the weekly 10 EMA. But I think what's even stronger than the weekly 10, it's not an indicator, it's daily trend. I think the daily trend is stronger than, price just as a signal going under the weekly 10. I don't think I've ever said that. I always say the weekly 10 is like the biggest, baddest thing from an indicator, but I define it as an indicator. A daily high or low is not an indicator, and I think it trumps it. But a lot of people are going to become bearish or if it pulls back, and price could really scream up because of all the shorts that might be piling on, and it just blasts right, like it just massively blasts right through all those areas. So watch out for that. Now, why would I be not bullish with the same pullback, which I would still remain bullish? So not 19.4. Maybe I should take that off. Boom. Let's just go like that. So if this happened all on Friday or the day after I'm recording this, why would I not be bullish anymore? Even if it came down here and looked like it bounced, I would expect a lower high, which means I'm not as bullish, right? That's your pop quiz. My answer to that is SPX weekly closure. All right, this is something I just spotted on because you're fortunate enough that I do VIP live calls, so we're hunting around for like an hour, and I can kind of show you some of the goodies we find, some of the gems from that in a more compressed sense. So the weekly closure, this SPX closes on Friday, right? And it would probably destroy, and Bitcoin follows SPX. So if SPX's rally gets just nipped in the bud by a Friday flipping the weekly candle red and creating a red closure, the chances of a green next week aren't very good. I mean, it'd be actually improbable, right? And so taking a look from current price to here, if you measure down and realize that Bitcoin's move are typically about 2 times the size of SPX, roughly 2 times. Okay, that's about, it's about 2.5 times. I'm sorry. So that's 1.25% move. Well, actually to flip red though. So red, about, 1.25% move. All right. So now we're looking at 2.5, to 3% move on Bitcoin. To have a red candle on SPX specifically on Friday. So if tomorrow Bitcoin is, what did I say? 2.5. So even if Bitcoin is under this other line, under 20K on Friday, when SPX closes, that actually could be pretty, it might be here. But if Bitcoin comes below, is below 20K on Friday, and SPX closes red, then this pullback area is no longer bullish because of that chain reaction that Bitcoin follows SPX. If the candle flips red and closes on Friday, then SPX's rally is probably over from probable as in statistics, more than 51% likely. Therefore, any bounce on Bitcoin here, I would expect a lower high, which would be in form of the weekly wick up on a likely red candle. And I would expect a lower high on Bitcoin. Make sense? But if Friday can stay strong and stay over here, and SPX closes green on the week, which would coincide with Bitcoin staying above 19,950 or so, then over the weekend or even Monday, if Bitcoin finds itself down here, I personally would assume it's a higher low, and that these recent highs right behind me of 21K will be taken out. And that is the answer to the pop quiz. I hope you found this informative, and go ahead for the recorded section of this. You can go to my most important crypto videos I've ever made over here. And if you want to watch my recent Bitcoin analysis as this move went up, and go click here, and we'll see you next time. All right, stay on. I'm still live show. That was just because I record that part. All right, let me do Ethereum real quick. Ethereum has structurally and on its own chart been a lot easier to trade than Bitcoin. Things have been more obvious, but there has been one not so obvious thing that has greatly affected Ethereum price that I didn't anticipate. And I want you to guess what it is as we're starting off here. It essentially coincides with this being more powerful than Bitcoin's move. And it was very unexpected. Ethereum versus Bitcoin was not looking good for the longest of times. I mean, look, since it should be about September 15th over here. Yeah. So September 15th is all this area when the merge stuff, and then after the merge and everything went down. So from that point, Ethereum, this is Ethereum versus Bitcoin. Doesn't mean Ethereum price is going down, but this whole time, if Bitcoin's going up and this chart goes down, that just means Ethereum goes up less. And if Bitcoin has a one-day pullback, Ethereum's pullback will be bigger, right? To the downside, for example. So this doesn't mean Ethereum price goes down, but exactly in the middle. So almost exactly, literally, like, listen to what I'm about to say. This is weird. In Bitcoin's recent 5% move up or so, exactly in the middle of that, right? When SPX was hitting resistance and making lower highs on small charts, Ethereum versus Bitcoin just went boom, flew up in the middle of it, and then during the middle of that just outperformed Bitcoin, and it hasn't stopped. It hasn't stopped. So keep an eye on this chart. If you're dealing with Ethereum and you're trying to get a feel for price, this chart's really important. It took me off guard, honestly. I even was saying before this happened, right now it's better, if you're long, it's better to be long Bitcoin. And that changed in literally a 1 minute candle. It was so watch out for that chart. It took me way off guard. All right. Now, but from a structural standpoint, Ethereum versus the dollar, that chart is, I think it's easy to read. So here's my read and why I'm thinking this rally has an extremely strong chance to hit 1720. Zooming out, we have origin lines. Let me get rid of some of these guys. There we go. So all the lines going up like this are origin lines, and they work almost perfectly on Bitcoin and Ethereum and most altcoins. So if you come down to this one, this origin line here, and bounce up, you're likely going to get resistance there. Even if Ethereum can eventually go above it, it's going to have to pull back from that area, likely. They're extremely likely, right? So zooming in, so this is years and years of price history. This is the 2017 top right here. Okay, so we're focused on this yellow line, which is extremely important because this was the ultimate support, essentially, like the main support of one of the two main supports. So the line above it and the yellow line were the main bottom supports for price in the bear market. So this line's kind of a big deal, right? And coronavirus went below it, got back above it, and used it as perfect support and rode it for quite a while. I mean, look how many days that was over here. That was 87 days, right? It looks like not very much, but 87 days just riding that line, right? And then previously using it as support, crashing below it and racing to it, pulling back. See how it pulled back from there? It did not get above. That's a 15. So that looks like it could crash, right? 15% is compelling to the downside, but it was just a higher low on the daily. So a pullback from this area is very, very likely. And look how much momentum price had here. This was aggressive. I don't know if you were in crypto at that point, but this was a very, very aggressive move. It looked like price bouncing on a bounce house especially on the 4-hour chart. If you look at it, it looks like this. It had deep bounces, but it was aggressive still. All right, so that's the same yellow line. Pullback's very likely to happen here, no matter what. But when you have two important lines in close proximity, and they are both some form of resistance with which price wants to interact before heading down, you typically choose the top one as a target if they're very close and they're pretty major. So this box here, this green box from here to here, this is a 2017 horizontal that interacts with the Wyckoff distribution drop the manufactured dump of Bitcoin, right down to 29K all in like 2 days from 55K. This is where, this right here is where Ethereum found itself and just bounced right off of. And this was also Ethereum's big breakdown point later. So zoom out. Those 2 points that I'm talking about are right here. Fabricated dump. It bounced off there 3 times, and that was the big breakdown of the biggest down move Ethereum's had. When everybody on Twitter is like, it's over, or whatever, it's the same line. So it's 2 exceedingly important lines. Oh, did it just get rid of that? Why did my yellow line just disappear? Oh my goodness, I hate it when that happens. I even have my stuff locked. For some reason on my mouse, if I use my wheel too fast, it makes the origin line disappear. I don't get it. All right, let's make that bad boy yellow again. All right. So you have 2 exceedingly important lines in the same area, and it essentially makes a triangle. So I would assume that this triangle is my target, but you have a pretty a rule that works very well. 2 close resistance areas, very important. It's going to hit the top one. So what is this line? It's 1720. And I've already shown you on top of that, even outside of that horizontal being there is extremely strong reason that you would get a pullback from this area because of this origin line. Even if it will blast through, it's probably going to come up here, then come down and try to find something there. All right. So 1720 is my target for Ethereum. And along with Bitcoin, Ethereum could easily have 4 red days in a row. So be careful with this. It could easily have 4 red days in a row. I will repeat that. And still be bullish on the daily. I'm telling you, like, it could look bad. Like, you know, even into what would be really wicked is if it had Thursday, Friday, Saturday, Sunday, and then started off Monday going all the way down to here on a wick, like 1345. And then that candle reverses like this and simply leaves a green tail for a wick. That's still a higher low on the daily. That is still bullish all the way down to 1360. It's still a bullish formation. As crazy as that sounds, it is true. So, and you'll see that it breaks the neckline. Like, this is a general neckline. It could easily go below it. I hope, most likely if you start closing multiple days down there, okay, the rally's probably over. But it could easily go below there. And that would flip a lot of people bearish, and it could still turn around on your faces. All right? So how do you reconcile this? In general rules, as long as Ethereum price stays above 13, let's just call it 1347, then I would be looking for the next bounce to more than likely make a higher high, higher than this high, and end up hitting 17 and change. Right? And that's it. I would remain bullish on the midterm time frame. Clearly, you can trade down, from then to now and make great profit with leverage, right? You can attempt to trade down. If you're bearish, it kind of looks like it's going to come down in here anyway. So, and it would still be bullish. So might as well. But realize if you're trying to play the short, I just told you what could happen. And honestly, I think that from a whale perspective and their incentive to make money by taking advantage of, retail and just everyday people, this is a perfect scenario. It would convince so many people that the rally's over. And a lot of liquidity come on the table in the form of shorts. So, and then my downside, another way that this could break down is if, like I said on my Bitcoin video from today, that if on Friday specifically, SPX closes a red week, that would be the only conditions within Ethereum having this nice higher low. I would be on a lower high watch then, because SPX will likely destroy the rally with a red closed weekly candle. But that would all have to happen on Friday. So if SPX closes green at New York time on Friday around 4:20, 4:30, then as long as Ethereum is over what, 1347, I'm still looking for higher highs and that being a higher low. Making sense? Very simple analysis, simple target, simple when my probabilities flip or when my bias flips, just clear line in the sand stuff, and one that is timing based, based off SPX. Everything's clear cut and dry on Ethereum. And honestly, if you are somebody who actively trades, Ethereum's where it's at. I'm telling you, it's great liquidity, which means other people's algos and the exchanges themselves can't really piss around with your stops. They can't go hunt you as easily because there are too many orders for them to get through. Ethereum is a slightly more volatile than Bitcoin, and it seems to have a much clearer line in the sand, and its chart is just a lot cleaner right now. So if you're dealing with Ethereum or dealing with crypto right now, and you're more of a Bitcoin person from a trading perspective, Ethereum might be where it's at for all those reasons. So hopefully this was valuable for you. All right. XRP. Good. I got through Bitcoin and Ethereum and it's only 634. So I almost met my goal. Let's take a look at XRP and its damn triangle. It's still flirting with it. So let's go take a look. We've been covering this for quite a while. On my recent XRP analyses, the analysis correctly almost got this to the T, right? I did not anticipate it coming back in and necessarily using it as support because those analyses did not expect Bitcoin to have a 5% move in one day. But so now I will go back, I will zoom into the micro timeframes and start letting you know, hey, this is what a breakdown will look like at what specific level and how price will move on the small candles. And I will establish when I would flip bearish and when I would flip, try to trade bullish. But right now, just from the look of it, it doesn't look like there's a lot of edge either way. So trading XRP right now is, in this exact moment, it looks like a no trade zone to me. All right, so I want to let you know when I think that you would have an edge, specific points, and what price would look like. All right, so let's zoom into this bad boy. Yeah, I don't think there's much of an edge either way. This really could do. I would go ahead and do this. I wouldn't. So one breakdown pattern it could form comes all the way down here, but I wouldn't be looking for shorts at that point because I think it would bounce from there. Because a lot of people, a lot of people are going to be looking at that line. I mean, pretty much anybody, algos, whoever, are going to be able to identify this trend line. So therefore, because it'll likely bounce here, shorting a breakdown of this triangle right when it happens is, well, could that be tradable? That's trade. I mean, just don't expect much more in a 2% move. Okay, I guess you could do it. That is tradable, but not a lot of reward. But you'd have a clear profit-taking target at least. So I wouldn't use this as my continuation on flipping midterm bullish to try to get a bigger move than 2%. Rather, I would wait for this to happen before I flip bearish, and then I would wait for a rejection from here. But it won't just come up and get rejected if this were to happen. It would likely come over here, make a lower high to this, maybe even taking out this high. Honestly, that's probably going to happen. I think that's probable at this point. Take out this high, and I would then wait. So I'm still not bearish. I would wait to be bearish till something like that. So around this point here is when I would be bearish. I would wait for failure pattern, then rejection, or sometimes it's reversed. Sometimes you get rejection, failure pattern, then rejection, right? And that, or or just rejection, failure, and then it goes straight down. And that makes it harder to short, which rejection failure patterns are a little tougher to short because at that exact moment, you don't know if it's recovering or not, right? You can't tell till it's a little farther down. Makes it a little tougher. But I would wait till this is used as a rejection, and I would not. So when price got here, though, with the idea that it does bounce, if it ends up bouncing from here or bouncing from here, it doesn't matter. Once it gets above these wick highs from October 25th and October 27th, kind of like what some people might be calling left and right shoulders, whatever, pattern traders, but those two areas, I would not be assuming lower high as long as, if Bitcoin is still strong. If Bitcoin and SPX are going up when this happens, I wouldn't even be considering this to happen, to be in play. Like this wouldn't be probable at all, right? So this is under the conditions that Bitcoin and SPX, the analysis that I've covered today on Thursday, October 27th, aligned with down movement. I could still see XRP doing something to this effect in the conditions that we are on lower high watch for Bitcoin as well. But if we're not on lower high watch for Bitcoin per my Bitcoin video today, then I would expect it to keep going from here, right? Maybe a pullback and then go. But the main point of this is, even if it breaks down from here, I wouldn't be bearish. Unless Bitcoin's like tanking, but it's not. It's not right now, right? I would expect this to be, honestly, I think this could potentially be a decent entry. Not financial advice. These are my opinions. What you do with my opinions is up to you. And I'm not involved with it. But me personally, I would still be long at this point. I would be, midterm time frame long now. Maybe micro time frame short because it's lower highs, lower lows on micro. But midterm time frame, trying to get bigger than 2% moves, I would still be bullish at that point until a rejection from this triangle happened. And so until this point, and the second condition to be bearish, if it gets trapped under here, doesn't touch this and just uses, so just go like this actually. It didn't quite work. But same idea, it uses this as resistance. That's a second possibility. I think the market would have to have a big turnaround on Friday. So this would be a red week, a red closure on SPX. So this situation won't happen unless SPX closes red on Friday. So if SPX closes red, you would probably be looking for this for short, right? Okay, so just because it's going to break down here, main point, it doesn't mean be short quite yet. Because it's perfectly, honestly, without the triangle, it's perfectly bullish still. I mean, go to the... Look. Low, higher low. You don't have a higher high yet, so you're in a no trend. But the daily has higher lows. And if it came all the way down to this point, it still has higher lows. As long as it bounced and closed slightly higher than this. Making sense? So the daily structure is still in shape right there. Zooming out. And then when price should accelerate to the upside. So if you're a person who likes to trade more with momentum, which honestly, I am leaning more and more that way in this bear market. I don't like to try to trade. I don't like to try to catch the higher low as much as it's happening. I like to wait till it bounces and then has a higher low pullback after the higher, like the second little bounce. But anyway, trading to the upside. If you're not a fan of that type of stuff, you just have mental rules. So you can't trade long until it's above here. I think price will start accelerating to the upside once these wicks are taken out. And that's when the momentum would really increase right here. Breaking above this area here for your momentum to the upside plate. 47.2 cents. And then you have the clear profit taking point of the top of the triangle, but that's a whole 5.33% move way up here. Around 40, just that shy of 50 cents. And so that is XRP up and down. And right now for me, it's a no trade zone. Too bearish on the micro to want to try to long that. But not bearish enough for me to want to short it because it's likely going to bounce here. All right, there we go. Okay. Now, questions. All right, so if you're just jumping on and you've asked a question, I want to make you aware that the questions with the emblem next to people's names, like a color circle with a star in it, those are my YouTube tier members. and I typically don't have time to answer their questions. So when my phone just jumped at me. So when I skip your questions because you don't have an emblem, I'm not doing it to be rude. It's just part of the deal with being in the YouTube tier. And if you would prefer to not just have to type your questions, but jump on what is similar to what I'm doing now, but you can turn your microphone on and just ask me questions, share your screen if I'm not following your logic, or just I can't visualize what you're asking. That's for the Discord. So the Discord community links are in the description section of all of my videos. And then Twitter is at Costas Verdes with the number 2. I try to keep people mostly updated on Twitter as well with altcoin and Bitcoin charts. And let's start looking at your questions. So Ottoman sent me a super chat. Thanks, OTA. He's one of my loyal VIPs, so clearly he likes the community. All right, let's go. Hi Tim, Kadena. Okay, well let's do it. Let's go get Kadena. Start off another live stream covering Kadena. Let's freaking get this. And again, I am recording this, so if you want to watch it later, it will be its standalone video. And Kadena has been behaving exactly as I've been anticipating. So let's see if it's still in my black triangle. It is. Still in there. And my purple line hasn't been hit yet. This is when I think it's got to move out. So, zooming out, this is what you're working with. And I drew this black triangle before it happened. For new viewers, you can go, I would go on my channel, search within my channel KDA. You don't even have to type Kadena, you just KDA. I would go 2 videos back. It's either 2 videos back or 3 videos back where I drew that black triangle and explained why price should probably go there and stay there for an extended period of time and roughly fill out the triangle. So no one else on all of YouTube will have these origin lines. Nobody, right? So that's how I was able to anticipate this. I'm the only person who uses origin lines because I pretty much made them up, but they work. It sounds stupid when I say it. I made them up, but they're pretty magical, and you won't see them anywhere else. All right, I think the TA from this is really obvious. So from a timing perspective, you have a monthly closure. So if you're a KDA fan trying to get a grip on price, just realize that a break up or a break down likely might involve the timing on this axis instead of up and down. It might be somewhere close to the monthly closure, all right, of Bitcoin. So the way Bitcoin and SPX close on October 31st, November 1st, which is what this line is, that's likely, sometime around this is when you're going to get continuation one way or the other. So make sure you have marked off November 1st or October 31st on your chart with a vertical line. And if you don't like vertical lines on your chart, then what you could do is just go up to the gear and play with the color and turn down the opacity so it's really light like this. See that? But I recommend you leave it on there because it'll help you not get frustrated with sideways movement. And if you're trying to actually trade it, just realize, there's really not much to trade. And there might not be much to trade in this small triangle until this time. So, perhaps spend your time somewhere else. All right. That's nothing bad against KDA. That Bitcoin has its moments like that too. Like, might as well look at something else. Like, go trade Luna or Luna Classic because it's moving and Bitcoin is going sideways, right? Or like today, Dogecoin. Fuck, like 40% move. Oh my goodness. Holy cow. And Bitcoin, nothing. Just sideways down. All right. So, yeah, these are all your key levels right now. So from a timing perspective, monthly closure, to the downside, it is a trend line. So it's not just one number, but if it's anytime soon, you kind of start getting scared around $1.25, right? Somewhere around that point. That's your breakdown point. And then your break up point is going to be almost exactly $1.40. But anything between there, it's just filling out a triangle. And it's probably just going to stay in there. And your trade won't get continuation much over that. Unless it approaches $1.40, somewhere around or after this purple line. then you can make your bets that it might keep going up. Because I really think Bitcoin has in it to hit 22K plus this rally easily with a big pullback. So because of that, if you haven't watched if you're a Kadena fan, you haven't seen my Bitcoin content for Thursday, October 27th, you need to watch that because it's going to greatly affect your Kadena, your understanding of what Kadena price, how Kadena could fake you out. So if Bitcoin is allowed to stay bullish with a deep, deep pullback down to 19.6, 19.5, 90, around there. So that means Kadena could easily wick out of here, get people excited to short or whatever they're trying to do. But then it comes right back up and actually ends up breaking up. And because Bitcoin is allowed a very deep pullback, because Bitcoin essentially went like this. So it could come all the way back, Bitcoin come all the way back down here and still be bullish. And because Kadena did not go up with Bitcoin, as Bitcoin draws down, Kadena could flow out of this. But as long as Bitcoin's over 19.6, I don't think it'll break down. I don't, even if it comes up, uses this as resistance, I think it would maintain a higher low structure. So, it's something that applies to all altcoins. So this is going to be valuable information, even if you're not a Kadena fan. When you go below support and flip it to resistance, you actually don't necessarily have a strong edge to the downside at this exact moment, even at this moment right here, because a lot of times the way price gets back above here is not making higher highs, but maintaining higher lows, specifically higher lows, and then goes up. That's why you don't truly get an edge to the downside after breaking previous support and flipping it to resistance after you take out what I call the punch low. So if it comes down and punches below, usually all these higher lows are above that, and it's not till resistance, maybe even a failure pattern in there. It's not until it takes out that low where it accelerates at that point. But if Bitcoin's over 19.6, that's probably how the Kadena would move. Similar to, honestly, it's very similar analysis to XRP, but XRP has a trend line down here and this doesn't. But it would effectively be the same damn thing. If Bitcoin's over 19.6 and this comes out of here, I would expect it. I think it would get rejected, maybe even a failure pattern and then rejection. But as long as you maintain higher lows and don't take out the punch low, I think it's going to be fine. Assuming Bitcoin's over 19.6. And that's it. So that's how you could be trapped and trade the wrong way. If Bitcoin and SPX are not breaking out and you see Kadena hit 140, that's also how you could be tricked, but it doesn't look like that's going to happen because this isn't moving up aggressively. So I think if any trick play happens on Kadena, it'll be to the downside with Bitcoin's aggressive and allowable permissible bullish pullback. And really, those are all the key points. Timing, mark that off. Draw the origin line, which you can go to my other videos and see me zoom out so you can try to copy them or pause this and screenshot that and try to make it, look similar. And those are all the key levels for Kadena. All right. Here we go. Okay, so Thurman SHS asks, hello, Tim. After today's dump in stocks and crypto, what percentage chance do you think we have for 22 to 23K? Yes, so yeah, I answered that question through the analysis. So you asked that before that. But specific to percentage chance, over 50%. I still think it's over 50% because Bitcoin is over 19.6. All right. What's up, Sean Dillard? Hey, I didn't realize I was on Discord too. Well, if you're on Discord too, Sean, then you can come on and turn on your microphone and ask me questions, and rock and roll from there. It's saying October 20th in title. Oh, you're right. Shit. I forgot. Yeah, the title's wrong. Okay, fixed it. Thank you. I didn't realize that. That's me being in a hurry. VXV. So Papa Long Balls without a smirk. VXV and XCur for some set it and forget it limit orders. Okay, that makes sense. Okay, so what Papa Longballs is asking is, it's what a lot of us are doing on Discord as well. We reserve, so this is important. If you haven't thought of this or aren't doing it, this is a great idea. A lot of people, in order to hold tether during this downtrend, instead of putting everything in futures and trying to learn how to trade in a choppy bear market, which is not a great idea, they are holding that tether in stable position in form of limit buys way down low, so that when you're sleeping at 3 a.m. some future Saturday and Bitcoin takes a 30% dive in one day, or in 4 days or something, that or a flash crash of 20%, that you wake up and your orders were hit, and you wake up like 80% in profit, right? For a lot, or you can just hold on to it for the next bull market. If it's not a flash crash and it just eventually hits it, you don't have to worry about trying to catch a bottom. You just have already guessed, and if it hits it, it hits it. If it hits it and goes a little lower, that's fine, but I still bought really low. So that's what his question is for these two. He wants some targets where I think I would put set it and leave it buy orders, which is a pretty good way to hold tether as well. It adds a little exposure to you, but I think it's a pretty positive exposure with the right levels. All right, so VXV. Is that a crypto? Yeah, it's a KuCoin coin. Okay, you've asked me about this before too. I think it depends on how aggressive you want to be within this concept. My one answer, if I could only give one, but I'll give it an alternative as well, is I would personally spread out limit buys between 15.5 to 17 or to 7 cents. So 15.5 cents down to 7 cents. Because even if we don't get a big drop until after the new year, it'll come down here to the top of the range, and most of your orders would fill. Even if it bounced off the top of the range, it'll go under 10 cents. So this is February, this is December, or late November from a time perspective, when I think a dump could happen. The last, well, maybe not the last, but a large move down could happen. So, yeah, that would be my answer. The alternative to that would be between 10 and 15. But I wouldn't set it and leave it above 15. But so the question is, I feel more certain about 15 and comfortable saying that. But the question is, how big of a range? Because, if your range is too big and it spikes down perfectly, I mean, you have a lot of money, that didn't fill anything, So perhaps it's better to concentrate in a smaller area. But then again, the disadvantage to concentrate in a smaller area is if it hits it and then goes lower, well, then you could have had orders down lower. So those would be my two options. 15.5 down to 7 and change cents, or 15.5 down to roughly 9.9 or 10 cents. And there you go. You stinky.
Annie, you should only get a toy.
All right. My girl wants my phone, but I gotta turn my YouTube, sign into a different account so she doesn't mess up my algo. All right, get out of here. When kids use my devices, I don't like them messing up the algo. I kind of like the algos. All right, here we are. XCur. Close the door, woman. Oop. Another KuCoin coin. So you're a KuCoin. Yeah, I mean, KuCoin gems. Oh, I don't know, man. I would, wait, before I open my mouth, let me look. came out at the market cycle top. Yeah, dude, I don't think I would for this one, man. That's my, you're not gonna like my answer, but yeah, this one's done. You can't go down 99.7. That's actually has gone down as much as Cardano did last bear market. That's exactly it. 99 point. No. That was 98.77. Sorry. Yeah, Cardano went down 98.77. I wouldn't do it for this one. I think the people who were considered founders of this, I think, even if they're not publicizing, they're done. I think they are. I don't think it's coming back. So that's my answer, even though it's not the answer you're looking for. But I'm gonna leave it with that because I that's a strong opinion I have. I think it's done. It won't be worth it. My opinion is I would choose something else. All right. So sometimes I don't tell you what you want to hear. I'll tell you what I think you need to hear. So even if you don't like it, I stick to that kind of as one of my true north needles pointing north there. Hey, Chris Crane. Chris Crane says, hey, what's up? I got FOMO today on that ADA spot buy. I didn't take. Okay, where do you think a next good spot buy it would be at all? Also, any opinion on people talking about a melt up to 57K BTC in November? Okay. Let's do that one first. Okay. There's a lot of noise going on about Bitcoin having bottomed, and we're going to have a melt up to ridiculously high numbers like 57K or beyond, right? That the bottom's in, everything's going on. So my take on that is as follows. There are a lot of bottom signals firing off. A lot of them, even my personal ones, right? But you must, and the chances of a Bitcoin bottom have significantly increased, like drastically, but it's still nowhere near 50%. But they have increased because my magic line on traditional finance, the earliest, in my opinion, possible point Bitcoin could have bottomed can only happen when the futures of Nasdaq Composite, or NQ1 exclamation, has hit line A, which is the equatorial line or the most important straight line in all of the price history of this index. There's no other straight line that's more important than this one. It has been hit. So technically, per my rule that I've been talking about since way back here, months and months ago, like people calling Bitcoin, I was like, no, it can't. Like the stock market can't have bottomed until this is hit. And it's actually probably going to hit this anyway, but it's not even possible till this has happened. Like, it's literally not possible. Like, any news of Jerome Powell changing stuff, no. The chart says that none of that will happen until this is hit. So it has been hit, even though it's still more likely this will be hit. But, so some things are brewing up, and we just had a 5% move, which we haven't had in a while. It looks aggressive. So here's my response. That was the case for it. I understand the excitement. However, zoom out. So all those indicators and all those things that you might account for that are firing off, hey, this was the bottom, we're going to melt up. I understand it. I'm not invalidating those. Rather, my approach to this would be, when do you take those indicators more seriously? What is that threshold of, hey, I'm getting excited, it will play out now? Right? So it's one thing to see it and to have Bitcoin go up 5% for a potentially macro move. Like 5% isn't enough to say, man, these signals are going to work. Right? Does that make sense? So I think anybody talking about that, yeah, there's a lot of stuff to keep that in the back of your mind, but not enough to think that it's most probable or even more than 50% chance, not even close to being probable that a melt up is going to happen. Right? maybe 25K. Maybe 25K. That is a reasonable statement at this point. So where can you at least begin taking those more seriously? And let's look at this chart. Let's zoom into this. So pretty much the whole bear market right here, right? Take a look. Down, up, sideways. But it also went sideways here, then went down. Went up sideways, then went down, right? So just all of this is all bearish. So where do I take those bottom signals seriously? Well, I think the answer is very freaking clearly, definitely not before you get above this high. It's not even above the first local high. Like, what are you fucking excited about? So my target for this rally is roughly 22K. It's got to get above that. There's literally no reason to even talk about it. To spend your time considering that stuff until at least, let me just look at my logic here. Just look at this. Okay, so even if you get a signal down here, like, when should you start thinking, man, it's actually going to play out? My signal's going to work. Definitely not until this right here is taken out. Period. Doesn't that seem reasonable? Right? It's one thing to have a signal, but it hasn't even begun playing out yet. Like, not even close. So that's my answer to a potential melt up to 57K. Way too premature to even be discussed. All right. You had other questions. Okay, where's a good spot buy on Cardano? We're going to cover Cardano price, and the context of this is a question from the live stream saying, hey, I bought on spot, or somebody fumbled their entry on spot trading, trying to buy Cardano and trade it to the upside. They want to know, assuming we're staying bullish as long as Bitcoin is above 19.6, which is kind of my general rule of thumb, which would be a deep pullback, where would be a good entry? And I will then cover just 88 in general terms as well within there. But I'm going to answer that specific question as a basis point. So we have one of the best macro channels in all of crypto is Cardano, right? Even though it is out of it right now, you still have, it is the best macro channel. It's the longest, most structured one. All right, so let's take a look at extending this line. This line is probably going to be too deep of a pullback to be my answer. Yeah, it's not going to be that line, because this line would take it below here, this wick low, and it would, even if Bitcoin rallied after that, this would probably make a lower high. Yeah, so to touch this, the trend line, it's too deep. So I would say structurally, Cardano, a good target would be, but so I'm on the daily chart. I think a good pullback target for a long entry on spot trade, okay, so this is not a setup for futures and leverage, is from these two candle bodies to these two candle bodies. It should give you, like a 2 to 4% range. Oops. And I don't know if that's the most probable pullback target. I'm simply saying, even up to this point, it would still be a higher low. Like, because Bitcoin could pull back pretty considerably, and this would be exactly in line with Bitcoin having a deep pullback to 19.6. So let me put a price tag on that. That would be a great spot to wait for, but it might not get there. So what if it doesn't get there? When might you start trying it? Let's go to the weekly. Look at how the candles are working here. So you do have some structure from the last bull market over here. I would say right here would be my favorite structural area. That's also too deep. So that doesn't work. I won't use looking that far left as in my answer. Pullback area right here to these daily candles. Now let's look at some EMAs. Let's look at the weekly 10. Ooh, it hasn't even gotten above its weekly 10. Damn. So Cardano's underperforming Bitcoin and Ethereum quite massively. All right, the daily 10 EMA is right there. Daily 21's right there. I think the daily 10 is a better pullback area. A wick below it down to here would be reasonable. Let me look at my ribbons. Trying to see if there's confluence between or among multiple different types of analyses. This wick low over here from October 10th. Yeah, so these are my three areas where I would say to myself, this is a reasonable target for a bullish pullback. You should see it labeled right there. And again, the last one looks deep, but it's not, because it's still a higher low on the daily. The daily trend is still up, and it makes perfect bullish sense, even though it looks nasty, but it isn't. On a daily chart, it's actually very bullish. Is it micro time frame and short-term time frame bullish? Hell no. Like, it's going to convince a lot of people it's bearish, but not on the other time frame. And again, if Cardano were to get here on Friday, along with Bitcoin being anywhere under 20K when traditional finance closes, New York time around 4:30 p.m. on Friday the 28th, if Cardano is somewhere around here and Bitcoin is under 20K on Friday around 4 to 5 p.m. and SPX so all of that would mean, in some more simpler terms, SPX closes the week on Friday red, specifically on Friday, as opposed to it closing green, and then over the weekend Bitcoin and Cardano get down here. It's totally different, because the SPX would have a green closure, allowing this to still be a bullish pullback. But if it all happens on Friday, it stops being a bullish pullback because crypto just follows SPX. And if SPX flips red on the week and closes, the prospects for a bullish next week are very low. So I would still probably look for a bounce here. So keep that in mind. On my spot trade position, if I see this happening on Friday, or I mean, even this, I would be weary to enter any type of position that is considered long, even if it's just trading on spot with 1x leverage, right? I would probably wait till, honestly, 4 p.m. on Friday to try to enter. Or if it's down here, I wouldn't enter until SPX closes. And if it's green, then I would start taking these seriously. But if SPX closes red, I would forget it. I wouldn't take the trade. And that is a full on. One more thing. Let's see what fibs might align with this. They don't align very well. The only one that aligns well is alongside the top target that I had, which is the wick down. It really might stop at 385. It has a chance. Of course, that won't happen if Bitcoin goes down to 19.6, but I don't even know, Bitcoin going down to 19.6 isn't a definite. Yeah, I would keep those three levels the same. I don't think that changes my analysis. Nothing obvious there. So that is Cardano for you. And just the weird thing about this is it can go down 13% and still be bullish. I'm telling you, just because it goes down 13% doesn't mean you flip bearish necessarily. So rock and roll. Tim, new thoughts on Trias after its move up? Probably I don't have new thoughts. But I might. I haven't seen it. I'm going to look at it on Bitcoin first. A move up versus Bitcoin might change my mind. So, is it doing anything different versus Bitcoin? Not really. I mean, look, after this big rally, it still just continued down. So this is nothing compared to this. That is quite a pop, though. And to do it as Bitcoin was going up means this had a serious freaking move. But all it did on this chart, look, watch. There you go. That's all that happened. So in from this perspective, what it just did, it's still bearish. Long term. From a 6-month perspective. Here, let me record this. Trias had an aggressive move up. I got asked during live stream, have my opinions and thoughts or analysis changed on Trias after this move up? And I'm starting off with Trias versus Bitcoin. And so sometimes when you're trying to figure out, has something really changed, referring back to the Bitcoin pairing as opposed to versus the US dollar is a good place to go. So you're not getting exposed to fake outs or, just Discord groups all buying it and, making a rally up that's not going to be sustained. So this is a buffer for that to try not to get tricked into something. And so has anything changed on this chart? Not really. You're making less aggressive lows is the most notable thing. So the move down is slowing, but it's still a lower high. And it's still below this trend line. So nothing has changed on that pairing, which for that specific question, has something significant changed? I would say no. So this box, y'all know how long I had this box here before this happened? Months, right? Y'all who follow my channel know this. So it's just a really aggressive bounce off of where it was supposed to bounce, honestly. So this bounce, look at this. The aggression or velocity with which it went up, it's because this area to not have new lows and price exploration down, like deep sea diving, this has to be defended. And it got defended not just at the top, but aggressively at the top. So perhaps the folks defending the idea that we don't want all-time lows during the rest of this bear market if Bitcoin were to head down, they essentially, people who are going for that, you have to take out a higher, most recent higher, so let's zoom in. The most recent high, local high on the day, let's go to the daily. Yeah, so in order to avoid that, it needs to get above here, use it as support, and take out the next higher high. But until this is used as support, where it just wicked up to, the next time it comes down here, people will not be inclined to extra defend it until that parameter has happened. So for example, even though this was strong, when it comes back down here, the same people who defended it and bought will not have as strong inclinations as a group, let's say of 500 people. Let's say 500 people were a part of this. Probably most of them next round will be wanting to defend this for a nice trade to the upside, right? But fewer than that 500 would be unless this happens. If this is taken out, used as support, and then if somehow it came back down here, I think even more than 500 people would be inclined to try to defend this. Because it would look like a really good buy, because it's a level that looks like it'll hold, and it's taken out multiple highs. So right now, no, I don't. I mean, my level finally hit when people for months were saying that's never going to happen. 79 cents is never going to happen. Well, there you go. 79 cents was hit, everybody. Boom. Boom. Oh, it has too many decibels. Yep. And those are my conditions for something changing. So what this is going to do is it will make this fun to trade on spot, because after a move like this, 50% move, its oscillations on a daily time frame will be pretty big for a while. So this is going to be a very tradable coin for quite some time, like a week or more. So if you can correctly identify higher lows, your prospect for maybe even trading a range, you're going to have a big ass range, which means volatility. And if it creates a range is not a synonym, but a pseudo synonym for predictability. And to have a profitable setup or just profitable chart, you have to have volatility and predictability, which this is setting up to give you. So nothing's changed outside of the fact that this looks a lot more fun. You're going to be a lot more capable to make good trades off this for a while. That's the only thing that I see that's changed, which is a good thing, right? There you go. All right, Sean's asking about Solo. That's not Silo, is it? This is Silo. Oh, wait, hold on. Before I get to Solo, here's Silo. I made a guess a long while back how this would move. So I made this guess 97 days ago. That ain't bad, huh? It didn't quite come. I thought it was going to tank here, but it didn't. Other than that, other than this, expecting a big drop here, because I thought it was falling off this horizontal and going to come down and hit this. That's pretty solid. All right, Solo. So you like the small micro caps. Now this, something has changed. So look, okay. So this is a great one to follow up with after Trias, because nothing really changes unless you take out at least 2 local daily highs. Like, you can't have macro changes unless that happens. You just don't. Taking out 1 local high in a bear market, it's typically just a trap, and it goes down after that. Like, it's just where things go, right? You have to get above and stay above the second high, right? All right, on a daily. This has done it. This has taken out 1, 2, 3, 4, 5 highs. This is a macro change. This is something else. Came out in January 2022, so it's a new coin. It looks like it's going to keep going up to me. I wouldn't be concerned about this breaking down. I would use the daily RSI, specifically this one. RSI with EMA and control zones. And if you want to know how to set this one up, you just go to my channel, go to the playlist that says Learn Trading Basics, and it's the how to set up your chart, and it's tagged in there, so you can go skip straight to the RSI part. But I wouldn't be concerned about this one until the daily EMA goes below and comes back up and gets rejected from its 12 EMA of the RSI. So even if it goes below here, I wouldn't be too concerned. But yeah, I would think this is not going to break down until that is a rejection point, and as of now, it's not. So, and now, if the RSI went from here straight to this level without all of this, here, watch. So let me show you this. Now, if RSI did this and found itself in the same shape, as it is now, right, and then it's exactly here now, but took this price path to get there, I would say it's slightly more, I think it's closer to a 50-50 that it would break down at this point. I would kind of call this maybe a no trade indicator because it's too indecisive. But having done this changes it completely. Like, this structure is not bearish yet because of this. It's not bearish until the RSI both leaves the green zone and gets rejected by the green zone, usually as the EMA is leaving the green zone. That's just how it works on all time frames, even like the 1 minute. It does the same thing, makes the same shapes that it does. And yeah, so it went over white twice. So this is you might call a bearish divergence, but this trumps this rule about going over the white line, and you're not bearish until you leave here and get rejected by a green zone and tick down. That idea trumps bearish divergence. So bearish divergence will not play out. So what it means is, actually, it doesn't trump bearish divergence. It just means because this went over here, the last strike of bearish divergence won't happen until something like, well, honestly, maybe actually what happened there, going above, but it didn't get rejected. No, it hasn't happened yet. It didn't get rejected by this line. It's not going to happen until green goes below, comes back in, and gets rejected by the EMA. That could be your highest high. Because as the RSI comes back into here, price will make a higher high. And this white line here is over here, and it rejects it. But price would still be higher. So, yeah, that's a better way to say it. On any time frame, if you see bearish divergence, you have to add one layer of TA that because it went over here, the last strike of bearish divergence hasn't happened until you leave here, the green, and get rejected. And until that point, even though this might have been bearish divergence, it's not the last strike. There will be likely another strike of bearish divergence, which means it'll keep going up. So yeah, I think this is, and honestly, this structure right here, like getting up here nice and unaggressively and hanging out at the highs, this is very bullish. This is very unlikely to break down. It could look like it's breaking down and, double dip this area, but I still would think it's, as it gets there, I would still think it's going to break up over time. Yep, that's how I would I would rely on the daily RSI on this one. Or just price structure. So going up, I mean, shit. I would probably use a smaller time frame, like maybe the 15-minute. Yeah. So I would wait. I would probably just box off the exact highs. Something like that. Hasn't quite made it. And that's when it'll accelerate for the next leg. So you could just wait for it to go, get here and it'll start accelerating once it clears this box. Or it'll start accelerating as it gets into this box. But you can see here, clearly it got rejected. And I didn't make that line because of this. I made it because of this stuff over. Actually, I tried to do this right here. Because of the wick highs and then wick high. Wick high, yeah. That is whatever this solo. And then conditions for acceleration up and conditions for a breakdown, using mostly the RSI for the breakdown. All right, thoughts on buying into certain alts for the day because of advertised snapshots and for airdrops. Adrian, I dealt with the whole snapshots and airdrops and whatever, things in 2017 and maybe early 2018, but my second cycle, I don't even pay attention to that stuff, honestly. So I'm not a good person to ask. That doesn't mean you shouldn't pay attention, but it means I'm not a good source of information for answering that question. Last snapshot. Maybe I don't know what you mean by snapshot. So taking a look at Flux. Oh, wow. Huh. It's going to get stuck. Wow, what a different story. Oh. Man, even though it popped off of that line, that's still a red week. Yikes. All right, I think I know what I'm going to say for this one. All right. Take a look at Flux on the daily. Concentrating your eyes on this area over here with the context of the bull market. Low, a super aggressive higher high, potential higher low, maybe come up to here to $1.18 to this next origin line. The daily kind of looks like that easily could happen, right? But you get a totally different story on the week. So honestly, the daily, macro-wise, it looks like it could ride this line over here, the exact same line it hit that I was anticipating for quite a while. Then it finally hit it and went up 39% or whatever. It looks like it could get in this triangle and break out, right? From looking at it on the daily, that would actually be my guess. It fills out this triangle for, looks like it's going to be a while though. I think this is going to go sideways for a month. Yeah, till perhaps close to December. It could easily do it, but then go up. I would guess up with the daily, but look at the weekly. This is a big difference. This is weird. I don't know which one to take more seriously. All right, let's go to the weekly. Look at the difference. I don't like that because the bounce, yeah, it was 40%, but that's a red freaking week. So even though the candles are getting smaller, it still means if it fills out this triangle, it looks like that would be a correction to the upside before continuing its weekly trend, just like this one was. But in miniature, like just a couple green candles here. Oh man, this one's gonna be tough. So the way to play Flux is if I were trading this, I would force myself to trade with a range mentality, meaning your approach to any trade and your expectations of that are a range. I'm not expecting this to go up 50%. I'm not expecting this to dive down 50%. Rather, I have specific areas of entries and profit taking that I have, rules for, and I won't divulge or exit my range mentality until this black triangle is broken. That's it. There's plenty of trading to happen here. This is a big ass range. Like there's a lot of money to be made in ranges, because ranges with 22% by default, that's volatile. And a range implies, that was the word I was looking for, it implies. A range implies Predictability. Volatility plus predictability equals money, right? Okay. Very profitable. So that's how I would view this. Until this triangle is broken, I'm trading a range. And it might not be a perfectly horizontal range, but I would keep it a range mentality. Whether you're a horizontal person, I would trade horizontals. If you want to go from here and take a fib and trade the fib levels horizontals, that's still a range. Trade it in a range. If you want to draw the same origin lines as I have, because I've zoomed out and you can go back on the videos, pause it, and try to make it look the same, and you're literally trying to trade this triangle, you're interested in buys here, you're interested in selling here, that's fine too. But even if you don't trade this triangle, I would not exit a range mentality until it's broken. And that is it. So these levels for here, I can't give you one level for the ascending line, but as of now, it's close to 66 cents, but the horizontal at the top, it is just one line that's closer to 80. So if it happens soon, 66 cents. If it happens in a couple weeks, wow, it's only about a penny different, 2 pennies different, so that's not bad. And then expect the possibility of something interesting to happen for a good entry around. So mark off the end of the month / the beginning of the new monthly candle when crypto might do something. You might expect good stuff to happen, like volatility to increase around this area. And that is how I would manage my expectations in analysis with Flux. Yeah, I think it's better than just trying to guess which way it's going to go. There's really no point in doing that in a sideways market. Just realize, how do I trade this now, and when do I trade differently? That's it. That's really better. Yeah, it's so much better than giving guesses in this market. Damn, you all asked a lot of questions this time. All right, secret. Oh, it's dark out already. Good thing I already fed and watered my chickens. What? S? Oh, somebody asked about, Dixie's next. SCRT. SCRT. Kraken? I thought I did analysis on a different chart, not Kraken. What's the question? Honestly, this looks like, man. So this is just like Bitcoin shape, but it's less mature. Bitcoin went like this and another higher low and then broke out above what was the neckline up here. So this might not get to take off before Bitcoin does. So this is a daily chart. Just this one higher low. Is that even a higher low? No, it's not. It's still it's operating off of lower lows. I don't think this is going to follow. It looks like it might want to, but I think Bitcoin will have reached its pinnacle of the move before this is mature enough to really take off. So I don't think this is going to do anything to the upside. I think it has a low chance. And if it does, it's going to be a wick, and it's probably going to go down at this level. Because its shape is not mature enough. 105. If it goes up, 105 would be my target. And I wouldn't expect anything better. Daily is in a established downtrend. It's not going to invite, but yeah, so buyers simply won't be invited. Unless a Discord group or some group wants to pump this because it's a planned pump, that could happen. But honestly, a lot of those pump groups, they do it because it's a good setup. It just goes a lot more aggressively and faster than what would be normal. But it's still done for a reason, right? When humans do it. When traditional finance does it, it looks totally different. It breaks all sorts of rules, and the planned events are not a real setup. But when you have retail people doing it, it is. So, and I don't even think retail people would ever choose it. I don't think it's going to go anywhere. ERG. This is versus Bitcoin. Ooh, this is not good. That's versus Bitcoin. It's not horrible, but it's at the threshold of being horrible. What a chart. Huh. So this went down as Bitcoin pumped. What? That is so weird. Why did this sell off? Bitcoin's bounce off its lows had already happened before this came out. And Bitcoin was still going up this whole time until here. Huh. And then all this makes sense, straight down, because Bitcoin was roughly straight down. And the April pump on Bitcoin, that makes sense. This is weird. To be followed up by this. Honestly, from here to here, I would have guessed that this coin's dead. I don't know, man. I think it's going to take out the low. Yeah, I don't think it's going to... Even if Bitcoin goes to 22K, I don't think it's going to get above here. I think this one's done. For this rally. It just had a rally, you know, like a month and a half prior, right? September rally versus Bitcoin's right now rally. And then when Bitcoin heads down, this low is going to be taken out. So this one's going down. You could go up to 260 first, but even at 260, I still would guess it will take out this low on Bitcoin's next leg down. That's it. This is like the most unique crypto chart I think I've seen. Not in a good way or a bad way, just nothing else has this shape from August of 21 on. This is a weird one. Huh. Yeah, that one's weird. Okay. Dixie. If Dixie and SP500 dumps at the same time, all right. Dog remote. Dog outside my office barking, but I got her a collar so it vibrates and makes a noise when I press a button. I'm not shocking her. I have shocked dogs before, but for that purpose, barking, or had just a light shock collar, but it's a small dog, so it's all vibration. And she shut up. Yeah, okay. So anyway, Dixie and S&P dump at the same time, dude. So that's a lot to think about. Because Dixie dumping is typically allows S&P 500 to go up. So that would require a scenario where the euro starts performing well and has a rally. Maybe alongside one other European currency. I think it would take two of them. Even though the euro is the most weighted one, I think it would take two. There might be other scenarios that can make that happen. That's one of them. And the euro is at a point to bounce up to 105. I covered that during the VIP call because I have Europeans on the call. I mean, some of my most loyal people are Europeans. Are All right, what would happen for BTC? That's a tough question. That might be the hardest question I've ever been asked on a live show. I think Bitcoin would dump. I think they would all move together. I'm almost certain of it. I'm not certain. In other words, I think it's very, very probable because Bitcoin is just trading with SPX down to the 1 minute candles with very few exceptions. And a lot of those exceptions happen exactly at what would be considered obvious entries. They're playing with the algo right as Bitcoin hits certain levels. Yep, that's my answer. I would very, very confidently say Bitcoin would go with it. They would all move together. Am I on the ETH train? I mean, not really. I just think it's the best thing to be trading right now. Quant, bounce upward. Ugh. Ugh. That's going to be not a good closure in 4 days unless it can get back up to 180. Even though it'd be a green month closure, that's not a bullish green month. It would have to go sideways for a while, for months. Or down, but more likely sideways since this is just a fabulous price action. I'm trying to figure out what everybody's going to be looking at. So the horizontal I have on there is what people are looking at. So that's definite. It raced up to this origin line. This is now invalid. And it's not ever going to be valid again because it was too aggressively down. So this looks like the master origin line, really. It just got rejected from it. Oh, it got exactly at the breakdown point. Man, the origin lines on this are freaking perfect. Oh, well, I don't need to make higher ones. I don't think it'll ever hit origin lines up higher for the rest of its existence. So I'll just go down from here. I get rid of this box. Get rid of that one for now and this one. All right. Honestly, it looks like it's going to hit this. That would be my main guess. Early November, dips below the horizontal and hits around 135 to 140 and then bounces. On a daily perspective, are there plenty of trades on the 1 hour chart until then? Yes. All right, so let me record this part of it. Quant's a little bit of a beast here. Quant price action, I just added my origin line, something I hadn't done for quant analysis for quite a while. The master origin line was the exact point of resistance, something I didn't anticipate because I hadn't made these lines until now. So with quant, I would say my previous two analyses on how price would move, I would say how it panned out versus my TA, it was okay. It definitely did not move in terms of drawing price action. It didn't move the way I anticipated, but specific levels of interest were respected precisely how I had anticipated. So it was kind of weird. Like I gave on one of my videos, somebody said already wrong. I'm like, no, I gave 3 options and still 2 are playing. What are you talking about? What are you talking about? But the way I drew price, it definitely behaved like the ways with which it approached those levels. I was not off. But who else on the internet is out there trying to give you precise drawings on how price will get to a certain point? The points were still hit, and price played around with them from a rule perspective as anticipated. So now with this added area or this added TA here that I should have had the whole time, let's go see if I can do a little bit better with specific price movement, not just levels, right? Because most people, getting levels right is pretty simple. But the question is, how does price behave at those levels? I didn't get very right. So let's go dive in. So the main thing I got wrong was I really felt that the horizontal down here was going to be hit before 180 would be hit, and that was incorrect. Because it took out this low, and then it came back up. So that was one thing I got wrong. A second thing that I got wrong in that analysis, with it, being very specific with guesses, I got a lot of things right though, but I got some things wrong. So let's review this. Is I mentioned I would not expect 180 again until, so because I thought it was going to go lower, I said, don't expect 180K until the daily 10, this orange line, is used as support. So what did it do? It did the second way it can go above, be bullish. It consolidates under it and then blast off. So if you follow my channel a lot, I often include, hey, instead of support, this is the second way you can get bullish at a resistance point. I didn't cover that, and that's what happened. So I got that wrong too. However, I did get a lot of things right. First off, I go to the video. I said, one of the most valuable tools in crypto. I bet this is your high or low area. Just use the projector tool, roughly 45-degree angle. Now, had you done that, would it have been a great guide for you? Abso-freaking-lutely, right? So that was the higher or the lower high target, and it did get rejected from that area. That portion was right, but it did not hit here before then hitting it. That's how I got the price movement wrong. Yeah, this was an unexpected turnaround right at this area. It didn't even hit the origin line, which is weird. Not for sure. Yeah, because this origin line is almost perfect. Boom, boom, support. Oh, this does get a lot of fake outs before the real move. So there's bigger money. This is not dominated by retail. Yep, look. This has big money in it, folks, which isn't a bad thing, but it's going to make it harder to trade, just like Bitcoin is. So before the true move, you have plenty of washouts of the correct position. So because the big money in here is taking on longs where normal people would never dare because it's breaking down, but the big money knows they're going to buy it right back and pump it up so they can grab long slower. Or just the asset itself. So there's good and bad. If you're trading this, it will be harder to trade than a lot of altcoins that big money is not involved with in their trading algos, highly sophisticated ones, because you're not supposed to, you literally can't trade as well versus algos than you can retail traders. You can't do it. Over time, it's just not possible. Or it's not possible to do it better. But it also means big money is interested in this coin. I can tell just by this stuff. This doesn't happen on coins that are retail driven. Doesn't happen. Or it doesn't happen regularly. And on here it does. All right, so honestly, this time I won't make a guess on how price gets to this point, but I'll make so maybe even better than the price path is the timing, which might actually be harder than the price path, but I'll take a slightly different approach here. I would say around the end of the month. So somewhere, let's say between, give me a day and a half cushion. Yeah, something like that. Between these purple lines, vertical lines, I think this yellow trend line, which if I zoom out, a lot of people are going to become buyers there. There's a lot of different types of traders are going to be looking at that. It's a mid-macro line, right? And it hits my origin line, which no one else has, most likely, or at least not in this fashion. It crosses it, which means algos will buy there. I don't know. I think that's my main guess. So sometime around the monthly close, I think it's going to dip under 140 and then bounce. My second, most likely, next, analysis for just general direction and targets for the next 14 days or so. Honestly, you might get a compression move on this, which would be healthy. It might ride this origin line. It might start forming a triangle like this. So here, this origin line, which you can tell it's real, right? It gets a lot of action. I mean, look at all this. I mean, just look. Boom, boom. It's not a coincidence, folks. Like that's not a coincidence. Okay, that's my second guess. And then I'll make a third guess, but I'll give you a specific threshold. So you have something tricky going on here. These origin lines do work on this coin, actually pretty damn well. But my third guess, honestly, is going to be a bull trap. I think it's going to trap people. My third guess would be initiating a bullish move above 180, looking like a breakout out of that triangle, just to then get rejected by that origin line there. Because humans don't see that line, but the big money algos do. That's what these lines are for. Because other people don't have them on their chart. So I could see it going up to 190 and then coming back down into the triangle. A bull trap above 180, get rejected by my origin line, which is ascending. So it's not a 190 horizontal, but it's close to 190. That would be my third guess. But in order, that would be in order. My main guess would be down here, just under 140 around the new month of November. Second guess, it fills out this triangle compression move. Third guess is more similar to the second one, kind of compression with a fake out, then comes back and rides this. And maybe even breaks down, but it just comes up and comes back in. Fake out, comes back in. What happens after that, I'm not going to guess because that's like 3 weeks out. So those are that. If you keep those three concepts with the pivot points, right? 180 as a pivot point. Fake out level that origin line, which you could draw in yourself. Just rewind this video to where I zoomed out. Put it on there. All right. So the pivot point is that, which essentially makes a triangle up here. See that? See that triangle? It's the inverse of this one and smaller, right? So that the pivot point would be here. And then the third pivot point is the trend line that everybody will be looking at, down closer to 136. And those are the three areas or the three general price paths that I would be expecting. And for the moment, though, perhaps it might be wiser in terms of your trading plan. Even though you might, if you agree with me that this looks most probable, maybe not trade that way until this triangle's broken. Like I would, if I were actually, so my thoughts on what's most likely, that it's not necessarily how you should trade. Maybe your trading plan shouldn't be down here until this triangle's broken, but with the idea that it easily could happen, right? And it would bounce back into here. So hopefully that keeps you safe with those three general price paths in order, ranking in order. All right, it's 8 o'clock. Okay. I've already done dot and ADA. Yeah, bumpers. That's a good way to put it. I like the word bumpers, Mathis. Yeah, bumpers for Quant, which I just gave. MTV. Awry. Is now a good time to get into Awry? And I'm only going longer this time because I canceled on you, so. Yeah, this looks like a great entry. Honestly, it looks fucking awesome. This is about as good as an entry as you can get. Yeah, this is.
It's not working right now.
Computer's not working?
Yeah.
Okay.
Can you help me?
Yep. Yeah, this is perfect. This is among the best entries I've seen. Absolutely. Absolutely, this is beautiful. That's honestly a freaking awesome entry. Not financial advice. That's my opinion. What you do with my opinion is your choice. MTV looks like it has a chance to round out for a reversal to the upside, a macro reversal. Despite what Bitcoin's doing, even though this is likely going to follow Bitcoin. However, if independent of Bitcoin, if you can do such a thing, this could be rounding out, right? But if Bitcoin tanks, this will tank as well. The one best guide that I can see on this, honestly, this chart is respecting the origin lines, not perfectly, but they are a damn good guide right now. So let's dive into the origin lines on MTV here. So what you might do is pause this video, at some point, or watch it and then come back to this point and try to make lines that look like mine. That's it. So the one I would start off with is honestly the dotted one right here. Wick, awesome bounce, resistance, perfect resistance. I would start with this line right here. And then everything should be parallel to it. So after you make that line, you just hold control, then click it, then drag it, and then start making your lines. So hopefully that part right there is helpful, because I think this is the best way. Honestly, this is a great guide. So let's go down to the 4-hour chart. See this 140-day consolidation. And again, this was my 2022 target. Not my low target, bottom target, but for 2022, wasn't too far off. But it definitely stopped on a dime, didn't it? And it's going sideways. So just looking at this right here, using the origin lines as guidance of support and resistance as horizontals are, what is your first and most obvious observation? Outside of the fact that, it seems to be toying with these lines pretty well. Outside of that, what observation are you making? It's on the right half of the chart. If it breaks this, it's going to drop hard. This is at freaking decision time. If it goes down, so from a horizontal perspective, this origin line will trap it. So even though it has more room to come down to hit the bottom of the horizontal and fill out the triangle and maybe bounce, if it were to come down here on this part of the triangle and bounce, it's going to get rejected with an extremely high likelihood by this origin line. Therefore,
please now, like,
it's bearish. So keep that in mind. It's getting ready to break down. Likely bounce, but then that bounce will only go up to there with a very high likelihood. Doesn't mean it's going to tank from there. But if it goes down, it's going to stay down. What could happen? Another common way for price to interact, doesn't have to be MTV, Bitcoin even, Ethereum with origin lines, is it likes to ride an origin line until it breaks what people are considering a neckline. And then you get a bullish breakout like that. So I don't see this turning around and just getting bullish. I don't think that's going to happen. Even though this consolidation is pretty mature, but the shape from here to here, it's not bullish enough. It's not in an uptrend. So in order for it to go up, by far the most likely way for that to happen is to ride this origin line until you get to probably here and you fill out this triangle right here. That is the only way it's going to go up with a very high likelihood. And that could take, so this point right here is November 20th. So your best bet for a move up is to go sideways for a month and hold on to that trend line and ride it. And so that price point of a break up is around a tenth of a penny. So 0012. 0012.44, as you can see there. It's already at the breakdown point, so it needs to hold this. 0011. And that's all you need right now. Because most likely, if it goes down, you already know most likely where it's going. And if Bitcoin goes down at the same time and it passes this, well, you already know where it's going. You have the next origin line. Easy. 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 Everything's crystal clear. And right here. And then the expectations of going up, you need to do this first. So don't expect it to go take off, and that's it. Pretty simple analysis. Guessing which one will happen. I just gave you the conditions for when one would become more probable. The probability to hit this is on the verge of happening, but you'll see it. Like you'll just see it go below the line, right? And probably, go a little bit below, use it as resistance, and then go down. If it's in the triangle, well, then it's going to stay in the triangle until it gets above here or breaks below the line. Simple. So to guess which way it plays out, it's honestly irrelevant because we have these like crystal clear guides. Just wait till the guide tells you, okay, now we turn left, now we turn right, now let's go up the mountain. Your guide will tell you where to go. Just let your guide work and stop guessing. And that's it. Dixie, yeah. I don't think I've ever had this cat on video. Hey, hi, Cookie. All right. So the one thing that has changed here, let's take a look at Dixie. All right, Dixie analysis from a crypto TA guy. For anybody who might land on this video who is not a crypto person, just take a look at what I have because you will not see Dixie's chart the way I have it set up. And I guarantee you, maybe you won't like it enough to use it, but you're going to like what you see on my chart. And you will not have seen it done this way ever. All right, so look at this. It's gotten close to hitting the rather obvious target of 115 to 120. 120 being the horizontal from back here in 2001. So between 115 to 120 was my target. Didn't quite hit it. So the question is, when do you assume it's not going to hit it soon? That is baked in. It could have a deep pullback and then hit that level later, but that could take like 2 years, right? So there's a big threshold of difference between eventually hitting it, because it'll take a long time, right? It probably goes sideways for a while, and maybe even sloping down for quite a while, like 6 months, but still be macro bullish, right? But so it might be more important to identify the more immediate stuff. Is the immediate aggressive trend changing, and it needs to have a compression move before deciding up or down. So let's go take a look. Has that specifically happened yet? And if it has, then we can shelf this for at least 6 months, because it ain't gonna happen if we get that condition / threshold. I think I already know what the threshold is, so let's dive in. All right. I am going to use the weekly 10. Ooh, that's a nice line too. Is that my daily 21? Oh, that's the weekly 21. I actually have not looked at this with the weekly 21. So look what happened back here in 2009. Went from top of the same range to the point of control way under the, and this is the 2-day chart, way under the weekly 21, and then went higher, which is pretty normal. So if you take off the EMA, that's normal. Top of range, middle of range, back to top, that is common. It doesn't matter if it's the price of oil or black market testicles, doesn't matter. That's common stuff. What's not common is going that aggressively below a major EMA and then making a higher high. That's a little wicked. But structurally, it's actually just normal for the definitions of a range. So one convenient tool to use here would be the weekly 21. As long as it's over it, technically, it seems like this is still on the table in a moderately immediate sense. If it breaks below there, then you're going to watch for a bounce in the point of control. But you're going to shelf that for probably 6 months. That is one way to look at it. To try to front run that, use a smaller EMA, the weekly 10. And you can zoom in down to the even 1 hour using the weekly 10. See how it beautifully, actually, let's go to the 5-minute chart, watch. So you could tell here that this line, this EMA, is obviously what is creating a significant amount of buying and selling, just the action, the movement of this, right? Very glaringly clear. So if in the next couple weeks or days, it looks like it might happen in days, being on the 5-minute chart here, small candles, throw on the weekly 10 with an MTF EMA indicator, so you can have the weekly stuff on here on small candles. If you see price, do something like it did here, but coming from below, then it's probably going to break up. So if it can get above it and do anything similar, like this. Oh, I took too much of it. If they get above and do something like that, then I would say that it might be more probable 115 will be hit within the next 6 months or months. But if you start seeing rejections and then it takes out I would say if it gets rejected and takes out 110.47 or this wick high here, then I would shelve the thought of 115 for a couple months, but not quite 6 months or a year, because if it gets rejected, takes out that wick high, then you have the weekly 21 down below, which it can still bounce off of, then make the higher high immediately. So what might happen here is you might have a compression move specifically between this horizontal of 111 or the weekly 10 and the weekly 21, and it might not make a decision until the weekly 21 is closer to 110. That might be how this moves. It might So to get a decision up and down, up or down, just continuation to one side, it might essentially fill out a triangle right here. That looks like a pretty likely price path. I don't know if that's my favorite price path, but that is definitely, that's probably going to be in my top 3 price paths of how this will move over the next the next 2 months. So this line right here in the weekly 10. So this horizontal in conjunction with the weekly 10 going to be very, very important. Extremely important. So conversely though, like I said, even though it gets rejected, you're going to have this that could then make it come back, right? The same thing applies, but reverse for the upside. Just because that condition is met, that it uses, the weekly 10 as support, I would be on the lookout that it uses this as resistance, then breaks back below the weekly 10. And then if it gets rejected, then it's almost definitely going to come at least hit the 21 or lower, the weekly 21 or lower. So if you're making trading decisions off of this, just realize using this as support might not accelerate price right away, or this going up right away, because you have immediate resistance. So that's why I would use this horizontal with this in conjunction, and anything in between is a shade of gray, right? Like not definite. So therefore, using this as support is not a definite thing until it gets above here, right? You don't have great odds. And then what else did I look? Yeah, so the weekly 21, the weekly 10 in conjunction, the EMAs in conjunction with 111.40. The idea that it might compress to wait to make a choice for a continuation up or down until the weekly 21 is a little higher. And it might use that as a compression move. Whether it goes up or down from there, I don't know. But just over the next 2 months, I would expect this could happen sideways. So the conditions for down are you go below the weekly 21 and use this line from the range that's like 12 years old. So they're right together, right? So if price goes below both of them, uses either as particularly the line as resistance, then it's going much farther down to 105. Yeah, it'll go to 105 over the course of or 106 over the course of the next 2 months. But that doesn't become probable until both the weekly 21 and this line have been taken out. So I would use the weekly 21 in conjunction with that line that you might go back on this video and draw and pause it. So just like I would use this horizontal in conjunction with here, shade of gray between, I would use the weekly 21, this line, shade of gray between, for my conditions to be bullish on it or bearish on it. Those are my triggers. In terms of price path expectations, I would also expect it to potentially just fucking move sideways for 2 months. And those are conditions for continuation up, reversal down, and my guess on how it might move outside of that and bore everybody to death and do absolutely nothing. There you go. All right, I got to be done. My 2 youngest girls have been out here, but my wife hasn't been out here to stop me, so which is kind of strange. Maybe because she knows I canceled out on everybody on Tuesday because I was out of power. And today I thought I was going to be out of internet because the internet to my house turned off from the outside box. It went down or whatever, but they fixed it within an hour. Crazy. Like a guy came out and fixed my box. It's like, damn, that's kind of impressive for a monopoly. Like the place I get internet from is a monopoly, which if you have a monopoly, like your customer service really doesn't have to be that great because you don't have other choices. But it was. I'm really surprised about that. So I'm glad I didn't have to cancel out on you. Actually, I went to the YMCA at 3:00 because I thought I was going to have to finish my work and then start the live stream from the YMCA with internet because I was adamant I wasn't canceling out on you all twice in a row. I mean, who would believe it? Like something went out on you two in a row? Like, no, this guy's a liar. I was like, I'm not letting that happen. Taking my laptop, going to the YMCA, we're making this shit happen. And then 15 minutes after I got there, my wife called me, okay, they fixed it. I was like, damn. All right, heading back. So I will see y'all. So I apologize that I couldn't be here on Tuesday. Had a power outage for 3 hours. It lasted 3 hours. Assuming nothing crazy happens, even if something crazy happens next Tuesday, I will go to a different spot with internet and we'll make it happen Tuesday 6 p.m. And then next Thursday 6 p.m. Tuesday, Thursday, New York time 6 p.m. We'll see you then, and be safe. Be safe. So closing statement. Most of you on here are clicking around with your money in crypto. I cannot stress enough how valuable what I'm about to tell you could be, because money not lost is money towards your P&L, right? Right now, price of Bitcoin, thus the price of crypto, is being moved at the whim of sophisticated algorithms from traditional finance. Humans, over time, cannot profitably trade. You can't. Against sophisticated algorithms. You literally can't do it. I mean, there might be a way to do it, but I don't think you can. Particularly when the trading volume is so low that 90% of all trading on crypto or Bitcoin is done by them, because normal people aren't as interested in it. Most people have left. So that's why I mean by the whim. Like, it's moving at the whim of them, because it's whatever they do, Bitcoin will do, with no external pressures of what the algos want from just normal other people buying and selling and muddying up the order book. So therefore, any plan they have for up or down, whether it's a fake out, whatever, it's harder for them to initiate those plans. And right now, it's just anything they do, that's where Bitcoin goes. So if you're clicking around with your money right now, just realize you might want to taper back your goals for your mentality of what you're trying to accomplish with the trade. You shouldn't be looking for a macro reversal. We're taking this up for 2 years, or even looking for 20% moves one way or the other yet. Because price is just, even though we had a 5% move up in Bitcoin, it's all choppy. It could come straight back down. It's all could be a trap. It's all at the whim. You are literally buying and selling versus highly sophisticated trading algorithms with no buffer. Right? It's like playing kickball or dodgeball against 8-year-olds. Or maybe even six-year-olds. 6-year-olds would be more fun. 8-year-olds would be fun too. But it's like playing dodgeball against 6, and we are the 6-year-olds. You'll get your ass kicked, right? Or you have so if you're trying to trade big and make big moves on your account in that environment, it's gonna hurt. It's extremely likely to hurt you. And not just over time, but within a short time frame. So if you continue to trade and click around with your money, first off, be safe with stops. But outside of that, the overall goal might be more in line with, I'm doing this to make sure I stay in the game and stay practiced, like a golf swing or a soccer kick. If you don't do it for 6 months, and you jump into a game right when you need to score a goal, and you just magically pop up in the game like that, and you hadn't kicked it for 6 months, and you have a goal, like your ball's in front of you, and you kick it, it's not going to be a good kick, most likely, right? So I would try to set my what I'm trying to do, my frame of mind, to I'm trading and clicking around with the intent of staying in the game and keeping my golf swing or my soccer kick sharp, and not trying to go big trades. I'm going to triple my account. Horrible time to do that. Stay safe. We'll see you next